Cathie Wood just bought an impressive amount of Tesla stock today, and I think you should know this as soon as possible. Cathie Wood is not a fortune teller. She probably does not have a crystal ball, although she has been correct a lot in the past. That's why she's so popular today. When she buys in this kind of quantity, I think it's worth knowing, especially over the next couple of days when there could be even more volatility, potentially a better deal to come for Tesla shares, or maybe not. Maybe Tesla stock just rips higher from here. We'll go over some of my expectations, what I kind of think about this buy from Cathie Woods. Now, you also have Fundstrat that is giving their opinion on what could be coming next for our markets. So, we have a lot to get into in a very short amount of time. We'll keep this one short, sweet, straight to the point. Let's get into it. First up with Cathie Woods. She bought 14,000 shares in her ARK-W fund, and she bought 91,194 shares in her ARK-K fund, to a total of almost 105,000 Tesla shares bought today, equaling almost $25 million. This purchase in Tesla stock today has bumped Tesla back to the number 2 spot in the ARK-K Innovation ETF. Cathie Wood's ARK Invest currently owns 2.75 million shares of Tesla, worth $685,130,187.42. Tesla is now 7.7% of the weighting in the ARK Innovation ETF, probably going to make the number 1 spot here shortly. That's because over the past couple of days, including today, Cathie Wood has started to sell Coinbase, which is in the number 1 spot currently. As you can see today, she sold 145,000 shares in the ARK-K fund, the innovation fund, and she sold 3,000 shares in the ARK-K fund yesterday. December 29th, she sold 2,000 shares, and on December 26th, she sold almost 13,000 shares of Coinbase, 133,000 shares sold here, 28,000 shares sold there, 12,000 shares sold there. You get the idea. 65,000 shares, 11,000 shares. She's selling a lot of Coinbase, and that's because Coinbase has done well. But given this recent buy in Tesla, which nothing is even remotely close to that recently, it's a pretty good sign she's bullish on Tesla in 2024. Now, Cathie Woods not only has an impressive track record over the last 10 or 15 years or so, she's been spot on with a lot of the companies she's invested in, especially with Tesla, really putting Cathie Woods on the map in 2019, 2020. But the fact is, you should not be oblivious. Normally, when there is a lot of institutional activity around a certain name, well, odds are someone somewhere knows something. And I think Cathie Wood is no different here. Now, who knows? Maybe she does know something. Maybe she doesn't. After all, at the bare minimum, it says Tesla's probably going to do well over the next couple of weeks and the next couple of months, and it probably is a pretty good indication she is satisfied with Q4 delivery numbers that just came out. After all, though, Cathie Wood is not the only one that is bullish in Tesla. Today, given Tesla was down 4%, this is kind of shocking. You had a positive order value of 60% from hedge fund and institutional options trades. You had 943 orders totaling $4.63 billion. And that's a lot for Tesla. Over the past week, you have had $11.2 billion worth of option activity. So $4.5 billion, a little bit over $4.5 billion. That's definitely a lot. An average day for Tesla is like $1 to $1.7 billion worth of options. And if you look at this data collectively over the past week, you have seen a positive order value of 64%, with 4,105 hedge fund institutional trades totaling $11.27 billion. A majority of options trades in Tesla from hedge funds and institutions. These are very large orders most of the time. They could be $50, $100, $200, $300 million trades a piece. They're bullish. And I mean, that's quite the opposite compared to what Tesla stock has done recently. Tesla stock has Well, it's fallen the past 4 days in a row now. It's been getting beaten up almost every single day. But all of this institutional buying is likely a good sign that Tesla is going to come back here over the next couple of months. I think you could be a little bit more simplistic about this. If we avoid a recession and the economy holds up, Tesla will do fine. If we don't, if the jobs report coming out on Thursday and on Friday show there's weakness out there in the labor market that is starting to form, well, stocks are going to get utterly beaten up into the ground. It's over for a while for our markets. If the labor market holds up and a recession stays away, then Tesla stock should do very well. Fundstrat's head of technical strategy, Mark Newton, says unless 4665 is breached, this pullback should likely begin to stabilize and turn higher in the days ahead. The ability to surpass 4,751 on the SPX should lead back up above 4840 in the weeks to come. This is essentially saying if the SPY stays above 466, we'll pull this up here on the charts, then SPY can basically make its way back to all-time highs over the next coming weeks. That theoretically, if Mark Newton is correct with Fundstrat, would be a gain somewhere around 3.5%, which doesn't sound like a lot, but 3.5% to the SPY could mean 7% for small caps or potentially something more for a stock like Tesla. Ryan Dietrich says stocks were officially lower during the Santa Claus rally period. This doesn't happen often, but it has been a potential warning before. Higher in January only 40% of the time. Q1 is flat on average, and the full year is only up a median of 3%. Of course, albeit the S&P 500 was up 9 weeks in a row and due for a pullback. In a little bit of good news, used car prices in the US are at their lowest levels in 30 months, down 11% from the peak in July of 2022. Earnings estimates are at an all-time high and profit margins continue to trend lower, even though everyone told us they had to go lower. This combo could be a nice economic tailwind going forward. I kind of look at this as maybe not such a good thing. When estimates are this high, I mean, that's a pretty high bar to beat. If you look at margins, it's a little bit different. Margins were higher in 2021, right? During the period of March through March 2021 through March of 2022, margins were at about 13.4% at the high. Today's margins, 12.7%, so margins could improve a little bit, but earnings estimates, I mean, this chart just does not look bullish to me at all. I think this is going to add a lot more volatility on upcoming earnings and what full year outlooks look like from especially some of your big earning companies like your Magnificent Seven. Tom Lee with Fundstrat says it's a positive sign on Wednesday. TLT turned around and started to do a little bit better. And if we go ahead and pull up TLT here on the charts, that is pretty much what happened throughout the entirety of the day today. As we have seen recently, when TLT rises, stocks have also been rising. That's because when TLT, this is the ETF that tracks the 20-year treasury, also applicable to the 10-year and 30-year treasury, when TLT rises, that means yields are actually coming down. And that's what we've seen on Wednesday. And this is really good news. U.S. asking rents fell in December for the 5th month in a row and declined 1% in 2023. So hopefully that rent inflation is going away. And to answer the question of the day, for anyone that does not already know my stance on this, is Tesla stock going higher from here? Absolutely, in my personal opinion. There's a lot more reasons for Tesla to go higher in 2024 than to fall or have a flat or down year. But we need clarity from earnings. As we just showed, earnings estimates are far too high. We need clarity from the labor market and the economic data, whether or not we are heading into a recession, if we're going to kind of just move sideways in the economy, kind of stay at trend growth around 2.5%. Are we going to fall under that? Are we going to actually enter into an expansion period in the economy? I think that's not on people's radar at all, which is a decent possibility in 2024. We just don't have a lot of clarity, and I don't think we will for really the next couple of weeks. We are going to get the jobs report on Friday. We are going to have ADP employment change coming out Thursday morning. But other than that, I mean, you probably need to get full year kind of guidance outlooks from companies coming here in the next couple of weeks with earnings season to get a better picture of where valuation should be in our markets, maybe where multiples should be. And again, how the economy is going to evolve in 2024. You could actually be setting up right now for a weak first half of the year, maybe a weak first quarter, and maybe a stronger back half of the year. Definitely going to be watching for some support around $234 per share. That is where your 50-day moving average is. If you don't find support there, then it gets really bad, especially if you fall under 230. Yikes. Then you have a gap to fill down to about 225, potentially even as low as 211. So let me know what you think down below in the comment section. Are you bullish? Are you bearish? What are you doing with your position in Tesla and in your broader portfolios? Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.